What if I told you that income tax, property tax, and even IRS collections can be discharged just like any other debt if you know how the system really works? Now, in this video, I'm going to break down how taxes are treated under commercial law, how to assert your rights to discharge them lawfully, and the tools that already exist within the system to settle without payment. All right? Listen, I've studied tax codes, administrative remedy, and the commercial structure behind taxation, and I'm here to show you why you don't pay taxes, you perform against them. Before we dive into this video, thank you guys for watching this video. Make sure to like, subscribe, turn on the post notifications so that we are at the top of the algorithm. You dig me? You are seeing live in full effect that we are talking about things that nobody talks about. Okay? And I think that that's where we're at today, where people try to gatekeep information, whether they learning it, just learning it. And this is why I kind of just have the format I have today. You dig me? My goal is to, really break those barriers so that you guys aren't afraid to review the information or even take action. All right. Now, everything that I talk about is not financial advice or legal advice or tax advice. Please consult the proper channels if you want to learn more about this and do your due diligence, my baby. Now, we got a lot of things to talk about today. Understanding tax, the legal framework and the legal merit behind discharging taxes. And we're going to talk about this step-by-step discharge process. Okay, make sure you stay all the way to the end so that you can gather all the information. Also, make sure you have a notebook. You know what I mean? Make sure you have a notepad, pen, paper, whatever the case may be, so that you can be able to write this stuff down and review it next time. All right? Everybody that's joining the chat, what's up, man? Now, let's dive in. Let's talk about understanding taxes as a commercial debt, okay? Most people don't understand the simple format that the IRS is literally just a debt collection company, okay, for a private entity. What if I told you that the IRS is no different from a Midland Credit Union? What if I told you that the IRS is no different from LNV funding? What if I told you that they're no different from the collectors that send you letters, call your phone, or whatever the case may be? They are just the debt collector that works for the United States, okay? Treasury. And if they are a debt collector, then they fall under the same type of rules and regulations that a debt collector falls under. Okay? So understand that all tax liabilities are contractual debts under commercial law. Okay? Commercial law falls under the UCC. Commercial law falls under the USC. Commercial law falls under common law, contract law. Okay? And according to 26 USC 7701, you dig me? The terms person and taxpayer refers to entities with contractual obligations. Okay? It says the term person shall be construed to mean and include an individual, a trust, estate, partnership, association, company, or corporation. You understand me? And then if we dive into where's taxpayer at? Taxpayer means any person subject to internal revenue taxes. Okay? Now, there's the other element of understanding that taxes are voluntary. Give me 1 second. Let me pull that up. Because of the voluntary compliance. Okay? While the U.S. tax system relies on voluntary compliance in the sense that taxpayers are responsible for calculating and reporting their own taxes, the payment of taxes is not voluntary. They'll say this, but there's a thing called voluntary compliance where if there's a voluntary compliance, that means that you are voluntarily paying your taxes. Okay? They will say not voluntary, but if you fall under the category of a taxpayer, then you are supposed to pay taxes. But if you don't fall under the category of taxpayer, then it's not voluntary. And we'll talk about the category of taxpayer. Well, actually, I have a video specific to that, but I won't talk about that in that video. We'll talk about it in this video for time's sakes, okay? But when we dive into even just the definitions under 26 USC 7701. Understanding some of these key terms will help you understand what entities are liable to contractual obligations. And once you file a return or accept liability, you actually created a contract. Once you accepted the aspect that you have to pay taxes, this is when that contract is formed. All right. So just like a loan or credit card, tax can be discharged through tender, performance, settlement, and administrative process. You are just now going up against the IRS. Dig me? Which may be a different ball game for some people. I don't want to steer anybody to, pay their taxes this way unless you fully are confident in the process. If you cannot do this with a debt collector, don't do this with the IRS. You dig what I'm saying? Because if you do it the wrong way, you can actually put yourself in a position where you could be hurting yourself. All right. Now let's just talk about the legal framework for discharging debt. We can go back to House Joint Resolution 192. House Joint Resolution 192 literally made it unlawful to demand payment in gold or lawful money. So the IRS is taking fiat dollars, okay? They're taking monopoly money. So really, that money really doesn't have much value to them in the grand scheme of things. Remember when I talked about how debt is an energy exchange and it's less about the money, it's more about the time, labor, and attention that you put into getting the money and the value and the belief into the monetary system. So it's not about the money or gold that they want. It's more about the energy, and it's part of the matrix. You dig me? Then we dive into UCC 3-603. My favorite law to talk about in any aspect of discharging debt, because this very section 3-600 code talks about discharging debts. So if you wanted to learn anything about discharging debts, if you didn't believe that you can discharge debts, I will tell you that it's literally in this section here. Even when you look at the next section, it talks about payment, or the section before it talks about payment. The section after that talks about discharge by cancellation. So if you wanted to learn about discharge, is literally in this section here. But the part that I want to talk about is if a tender of payment of an obligation to pay an instrument is made to a person entitled to enforce the instrument and the tender is refused, there is discharge. Okay? So tender of payment discharges the obligation. As long as you submit a tender of payment, then and whether they accept it or reject it, there is a discharge. All right, that's UCC 3-603. Then we dive into IRS Forms 1099A and IRS Forms 1099C, which essentially breaks down the abandonment or cancellation of debt. So if these things are being used either on the back end or by you, and obviously if you use it yourself, you have to make sure to be able to prove that you are the lender in this case. If these are being used, then that also is showing and proving that debt and obligations can be abandoned and canceled just by filling out a form. Okay? Then we can talk about IRS publication 4681, which talks about canceled debt. Okay? It says what constitutes canceled debts. Okay? What you should be doing on the tax side for canceled debts. Okay? And obviously we can go down this entire list and, really dive deep into this, and I may save this for another video for time's sakes. But as you can see, canceled debts, foreclosures, repossessions, and abandonments, what you should do. Okay? Canceled debts is in chapter 1. Okay? Some of the examples are in bankruptcy, other judicial debt relief, the statutes of limitations or expiration of deficiency period, foreclosure election, debt relief from probate or similar proceedings, by agreement, okay, decision or policy to discontinue collection, other actual discharge before identifiable event. Okay, so obviously this breaks this down. Come here, learn this, do your due diligence. We're not going to talk about all of this right now, but take the time to review this publication, IRS publication 4681. Okay. Then we dive into the Form 56. The Form 56 essentially breaks down and notifies the IRS of a fiduciary relationship. In this case, you could exchange the fiduciary relationship to your trust. When you fill out this form, it actually revokes the fiduciary relationship of anybody who already has it. So now you essentially have taken ownership over that fiduciary relationship. Okay. If I were to pull up the Form 56, Form 56 PDF. Spelled it wrong. This is what the Form 56 looks like. Okay. Whether you are shifting the ownership to a trust, whether you're shifting the ownership to yourself, or you as a natural person shifting the ownership of the straw man and the fiduciary relationship to you, whatever the case may be. Obviously, it's better when you do it through a trust or business, or whatever the case may be, but this is the Form 56. And then we can dive into the Form 843, which is claim for refund and request for rebatement, and specific for the refund aspect of things. Okay. So when you check these out here, it's really about understanding that tax is a commercial instrument. And when you understand that taxes is a commercial instrument, you will stop panicking and start performing. These forms are put in place for us to fill out. Okay. Obviously, when you fully understand them. Okay. Someone will say, okay, well, damn, I can't file my own taxes and claim my own refund. Yes, you can. You just go to a third party. You dig me? No, I can't perform on my IRS debt. Well, yes, you can. It falls under the FDCPA. The FDCPA literally breaks down that anybody collecting a debt falls under the Fair Debt Collection Practices Act. Under 15 U.S.C. 1692. Pull it up real quick. Definitions. It says some keywords. The term consumer means any natural person obligated or allegedly obligated to pay any debt. All right. It also says the term debt means any obligation or alleged obligation of a consumer to pay money arising out of a transaction. The term debt collector means any person who uses instrumentality of interstate commerce or the mails in any business for the principal purpose of which is the collection of any debts, or someone who regularly collects or attempts to collect directly or indirectly. All right. So when you see this word any, that literally means no limits. So when you see any, it doesn't mean, collection agencies and not the IRS. It means anybody that's attempting to collect a debt falls under the Fair Debt Collection Practices Act, is considered a debt collector. So when you understand that they are considered a debt collector, then you would treat them as such. It's simple key terms that you can really understand so that you can have more, confidence in the process. You dig me? So what we're about to talk about real quick, and then I would definitely tell anybody to come and review this entire section, get well versed in these terms, because what happens is you'll read, some people will come and just read these things here. And it's a reason why this stuff is put in order. Some people will come and just read the congressional findings. Some people will just go straight to the validation of debt. Some people will just go to unfair practices, but they don't know the simple definitions of the Fair Debt Collection Practices Act. So they'll see things and get confused and say, hey, well, this confused me. Just start with the definitions. Matter of fact, start with congressional findings, go to the definitions, and then start to find things that stick out to you. Okay. I had someone ask me about a specific section, 15 U.S.C. 1611, which is under the Truth in Lending Act, talking about civil liability. And he said, how would I explain this to the creditor? I said, when you read it, number one, it's not really much to explain, because when you look at 15 U.S.C. 1611, it says that they will be civilly liable if they give false and misleading information. I mean, that's pretty much like plain and simple, at least to me. Okay. So let's just talk about how to start the discharge process. Now, the discharge process is very similar to the things we've talked about, okay? But it's just a little bit different, okay? Number one, you want to determine the type of tax debt, whether it's personal income, back taxes, liens, etc. And you want to make sure to get a full accounting or notice of deficiency. Write that down. Okay. In the aspect of asking them for this is going to pretty much lay out everything that you need to know about your situation. Okay. What is a notice of deficiency? A notice of deficiency, also known as a statutory notice of deficiency or a 90-day letter, is a formal notification from the IRS stating that they believe you owe more taxes than you reported on your tax return. Okay? It also says it is not a bill. It is a proposal that gives you the opportunity to challenge the IRS assessment before they take collection action. All right? Whether you get that or the full accounting, you're going to be able to reveal how much you actually owe. Step 2, and this is when a trust can come into play. You want to assign the liability to your trust. This is optional, but it is powerful. I would say the deeper you go into the process, things become more. I won't say it become easier, but it becomes better for you if you're doing this through your trust to protect yourself legally. You dig me? So you use a private trust as the remitter. And we talked about this in my previous remittance video, trust and remittance, and appoint yourself as trustee with authority to settle. If you say, well, how do I put together a trust? You can go online, learn the step-by-step process yourself, or you can tap into the complete deck guide down below in the description, and you could be able to set your own private trust up. Now, setting up a private trust is not just as simple as you going on the IRS website, setting up a private trust, getting an EIN. You have to do the declarations and everything privately first. And then once you do that, then you go and get your EIN from the IRS. Okay. Once you have set up your private trust and once you have, assigned the debts of the tax obligation to your trust, then you can start to tender lawful performance. Okay, you can send the coupon remittance or bonded promissory notes. Okay, you can create your own promissory note, or you can take the remittance coupon, which is also at the same time like the tax bill, literally looks just like the remittance, and you can remit that. Okay. When you remit it, it doesn't matter. People say, well, okay, bet, do I send it to this person? Do I send it to that person? If you do this part, which is a notice of tender, create a Form 56, giving yourself the fiduciary obligation or the fiduciary duty or giving you the fiduciary relationship, and then you submit an affidavit of truth about the truths about IRS debt and what you understand about that. It doesn't matter who it goes to. Obviously, you want to send it to the headquarters. If you don't know, you want to send it to their legal counsel. You want to send it to the remittance address. And I do have the remittance address. I'll just have to find it. But whatever the case may be, if you send it to the wrong place, there is a law called accord and satisfaction where they just have to make sure that it gets to the right person. Nobody can just come back and say, oh, well, you submitted this wrong. Well, if you read what it is that I'm trying to do, then you'll make sure it gets to the right place. Okay? That's moving in honor. If you don't do it, then it's just manipulation. If you don't tell me where to go, that's omitting information. That also falls under civil liability. Okay? And if you want, you can reference House Joint Resolution 192 and UCC provisions. You can reference 3-603. You can reference other laws that may help your claim when they try to say, oh, well, you can't do this. You can throw that stuff in there, making sure you're doing it in a strategic way. Like, for example, hey, if you refuse this, then according to UCC 3-603, the obligation is discharged. Putting things like that in the letter. Obviously, you don't have to explain it to them. You just have to put what you know and what's going to back you up. So in the event that they try to say, well, you didn't do this or you couldn't do this, you already have notified them of it, that you know what it is that you're doing. Because they're trying to make it seem like you don't know what you're doing. But this is why you kind of put that stuff in there, not to convince or teach them something that they already know. It's more of letting them know that you know. And to not to play with you. All right. They don't respond properly. You want to make sure to use the administrative process, notice of fault, default, and dishonor. Okay. Use certified mail and create your own administrative record. So what happens is if you get in a position of where they want to start taking legal action and saying what you're doing is fraud, you already have a private record of what you have done in the communication. Okay. So here's what happens next And here's some advanced options I want to talk about when it comes to challenging IRS debt, because you have to be very strategic and you have to be well versed in the information, well versed in the administrative process. This is not something to really just play with and say, come up off the wind and say, hey, I'm about to go ahead and discharge my IRS debt, my IRS tax obligation. You can do it, but you have to be strategic. But you have to fully understand exactly what it is that you're doing before you do it. Okay? So if they ignore, you want to send a final opportunity to cure. Okay? You send that and you essentially saying, hey, look, my baby, you ignored me. Maybe you missed it. Here is your opportunity to cure. Here's your opportunity to follow directions. Okay? You want to prepare for a Form 843 for abatement, okay? You also want to send a FOIA request. A FOIA request allows you to get informations that you believe, are in regards to things that are held by federal agencies. The IRS is a federal agency, so you can pretty much request, information, okay, from the federal government agencies. And you can also file a UCC1 lien to secure your claim if there's ongoing silence or dishonor. I'm not going to talk about how to do all of that right now. I may say that for a separate video. Matter of fact, I may write that down. Okay. Now, you also want to combine a 1099A or a 1099C if there was a seizure or cancellation, if you have those copies. And I also will tell you, as a bonus, you can use a CPA or a fiduciary to act on your trust's behalf if needed. Okay. Again, all of this is just for extra protections. Obviously, I tell anybody to consult a CPA and consult an attorney, a legal professional, if you decide to take this route, because again, you do want to have somebody on your team if you feel like you having trouble understanding it. Okay. Because understand that you are not evading, you are performing. That's the difference between lawful remedy and fear. A lot of us think that, oh, this is tax evasion and tax fraud or whatever the case may be. But the people that say that are the people who haven't necessarily read the law. The people who say that are people who don't understand the Fair Debt Collection Practices Act and the terms behind it. The people who say that are people who don't read the law. It's just plain and simple. Because when you read the law, then you won't really say anything like that. You would just keep your mouth shut. You get what I'm saying? And the people that say that are either people who are, because if you talk to an attorney, and they're on the real tip, not consulting, they're a friend of yours, they'll tell you, hey, a lot of this stuff is fake, okay? As long as you make your story truer than the next person, then you could potentially win, okay? So don't get wrapped up in thinking that someone's going to have more authority over you just because they have a name attached to them, or they're a government agency, or they're a police officer, or they're a debt collector that's connected with the company, or if they are an attorney. Because the reality is, as long as you know just enough to be able to shift the story in your favor, you can win in any situation. Okay? So understand that discharging taxes isn't about rebellion, it's about remedy. And the law gives you the tools. You just have to use them with confidence and structure. This is why I attempt to break down everything step by step. We may need to do multiple videos on this so people can fully understand it. I may need to make a whole mindset series geared towards taxes, because after this video, I don't want people to just reach out to me and say, hey, I want to discharge my taxes. My baby, you need to go and listen. You need to go and not listen. You will need to go read and study before you decide to do any of that. Because this is not something to be played with, not something you just come to somebody and say, hey, can you do this for me? And again, I'm not an attorney. There are attorneys out there that'll bill you $800 per hour. Okay? $800 per hour means they get paid every minute. Every minute you talk to somebody, let's do the math. 800 divided by 60. A minute of attorney's time, and this is on the low end, is $13 a minute. This is why I tell you to go ahead and research and read it on your own. because you'll look up and you're going to have a big attorney bill. Okay. But this is why you want to make sure that you have everything in order before you go to an attorney, so that you are more telling them what exactly you need them to do. They are convinced about your process, and you're not wasting time of them trying to do whatever it is that they're going to do, because they'll take their time. Trust and believe. They get paid by the hour. All right. So if you gotten all the way to the end of the video, you're a real one. Okay. If you want to learn more about this will be in a complete deck guide, from templates, from how to fill out the Form 56s in the vault section down below in the complete deck guide. Go ahead and tap in. If you want to work with me one-on-one, not specifically to this taxes, I could help you understand it. I won't help you discharge your taxes, but I help you understand how to discharge your debt. Tap in with my one-on-one mentorship. If you want to fix your credit, get to 6 figures in funding. If you want to be able to start your own business, tap into that one-on-one mentorship. Number 3, if you want to learn and be updated on my videos, tap into the Instagram at biz.nick. Also tap in on Twitch. We live on Twitch to do these breakdowns, so that some people can get the sneak peek first before it actually gets posted later on tonight. So make sure you tap into the Twitch as well, so that you can be notified every time I post, or every time I get on live. Not only will I get on live to do these live breakdowns, but I'll get on live to show some day in the life, get on live to just answer questions, and get online to maybe even react to some of my videos and answer some of the comments. So make sure you tap into the Twitch. The link will be in the description. And my last question is, have you ever had issues with the IRS or tax debts? Comment below and let's talk remedy. Remember to like, subscribe, hit the bell, because the IRS has a remedy built in. They just don't want you to know it, and they just don't want to teach it. If you got all the way to the end, comment the word discharge, and I'll see you in the next one.